Obviously had a significant impact, basically in all global equity markets. Concerns surrounding, like you said, the debt crisis for key economies in Europe obviously weighed down sentiments, and given how much of activity on the local bourse is driven by foreign investors, clearly that was always going to have an impact. But then again, I think on the local front as well, there were a number of key events that also contributed in no small measure as well to dampening equities. There was the constant MPR adjustments, which obviously at some point skewed investment in favor of fixed incomes against equities. So pursuing the inflation targets of single digits and trying to keep the exchange rate stable obviously had this impact also on equities.
No, very good points as well. But I think one area that has been very, very disappointing has been the banks, and down almost 40%. That's the NSE banking index.
Yeah.
And obviously not justified. We know at some point there were some concerns about the rescued banks. Obviously, AMCON stepped in to recapitalize 3 of them. They've cleaned up the NPL situation in the banking sector, but yet the sector is still significantly depressed.
Yeah, well, for the banks, it's not entirely surprising. However, I think the key question, is more in terms of the magnitude of the losses recorded for banks, as a sector. Indeed, I think the concern surrounding the capacity of the CBN to see through the reforms, and even in some cases in terms of the asset quality of the banks themselves, and questions still being asked about whether or not the NPLs have been truly and totally taken care of, where for me they were overemphasized. Clearly, given where banks are trading, and given the fact that a good number of them have recovered in terms of earnings, we've seen a significant drop in NPLs, asset quality has improved, there's still not a significant amount of liquidity. I think they stand to the traction for earnings growth is more positive in terms of momentum than negative, and that should obviously lead to a significant recovery for banks.
But will we see a recovery in price next year? What are your expectations for next year? 2012 is a year that most analysts I've spoken to are at best cautiously optimistic, and many are saying that this market would probably trade sideways.
I think consensus is that the market may trade sideways. Looking at where we are in terms of the NPR, for example, and the outlook for inflation and exchange rate stability, there are still concerns that if we might not see any downward revision in the NPR in the near term. That obviously tells us that yields on fixed income securities, whether they are short-tenured instruments, FG treasuries, or longer-tenured bonds, will continue to trade, and offer real returns. So clearly would place equities on the back foot as against these other securities. That said, I still think that we will begin to see even better performance from banks, both in terms of ROE, in terms of earnings growth, EPS. We expect to see even more robust growth in terms of turnover and revenues for a good number of them. And that may ultimately begin to drive a return in value, because looking at where they're trading from a price-to-book perspective relative to emerging market peers, Nigerian banks aggregated is trading around maybe 1-time book, whereas their peers in emerging markets have traded back up to 1.8, haven't come down to as low as 1.3 times in the middle of the year on concerns of Europe. And if you compare ROE for Nigerian banks with their peers in emerging markets, you find that they are comparative, in terms of performance on the level.
So hopefully we'll see a repricing of the banks. What about the non-bank stocks, particularly the consumer-focused companies? We've seen the brewers outperform.
Yeah. There's
a general view that many of them are a bit pricey at this time. Do you think we might see a correction, a repricing there that might actually be a dampener on the index?
Incidentally, for the brewers, there's a joke analysts in my office share where we say, in good times people drink, in bad times people drink. So chances that we'll see a correction in pricing for the brewers is limited. We still think that they will continue to perform positively. Positive news from the brewers in terms of earnings growth, in terms of positive numbers, and positive financial performance typically would continue to sustain prices for those stocks where they are. In the worst case scenario, we see that they will probably trade sideways, but that is not even likely given the trajectory, historical performance of the stocks.
So you think that we could even see them trading at a further premium to where they are now?
Well, in a sense, that is what typically happens with the consumer goods stocks. There are notable names that, if notable few stocks I could mention, for example, like in Nestle, you see the same thing with PZ Cousins, you see the same thing with Unilever, same thing we see with Nigerian breweries and Guinness particularly, where they trade at a premium in terms of price to earnings compared to whether their peers in other sectors or across even other geographies. Now the reason for that being, typically you find that investors would price in the future performance into the value of the stock. So at some point they appear to be pricey. However, when the results do then come out, you find that the EPS then goes to match those valuations, and then it stays there, and then it just keeps going in lockstep. So hardly ever do you find a significant correction unless there's some very negative news either surrounding the specific companies or the market as a whole.